So next subtopic here is what reports to those charged with governance. Reports to those charged with governance. Reports to those charged with governance, and I defined those individuals who are charged with the governance, and these are the board of directors, the management, the audit committee. These are individuals who are responsible for the strategic direction of a company. And typically, candidates, the board of directors are a critical component of the audit process, because the reports to those charged with governance provide the individuals with information about the auditor's findings and opinions, as well as any significant matters that should be brought to their attention. You will recall that the external auditor is hired by the owners, the shareholders, and the external auditor reports to the shareholders, but it is also required to issue reports to those charged with governance, because then he will add value, because those who are charged with governance may need these reports in order to execute their mandate. You understand? Because the auditor independently and objectively examines the financial statements without any bias, without any undue influence. And the reports that are generated at the end of that process may be very relevant, very crucial. And these reports must be submitted to the individuals who are charged with governance. And these reports may include the audit opinion, because we are discussing the auditor's reports to those charged with the governance. So just briefly, it's important for us to mention what is contained in these reports. We may have the audit opinion. Audit opinion is one of the components, and it could be opinion on the fairness of the financial statements. The reports may also have a summary of findings. Summary. The report will contain summary of significant findings. Significant findings. Reports for those charged with governance will include summary of significant findings, a brief overview of any significant issues or matters that were identified during the audit. There could be other reports, because here we are talking about audit of financial statements. There could be other reports apart from the reports on the financial statements. And depending on the circumstances, the auditor may also provide other reports, such as reports on internal control system. The auditor may issue a report on the internal control system. They may issue reports on specific areas of the financial statements and so on. So other reports. And I've noted that those charged with governance are responsible for overseeing the entity's governance and risk management processes. And therefore, the auditor's reports play a vital role in helping those charged with governance to fulfill their responsibilities. So by providing information about the quality of the financial reporting and identifying areas of improvement, the auditor then can help those charged with governance to ensure the entity's long-term survival or sustainability and success. You understand? Yes. Then we have the management letter. Management letter. These are letters that are drafted at the concluding of an audit stage. Management letter. Now, the management letters are issued during the audit process. And the management letter is a communication, as you all know, from the auditor to the management that identifies areas of improvement or potential weaknesses in the entity systems or even controls. It is provided at the conclusion of an audit, but it can also be issued at other times during the year if significant issues are identified by the auditor. But in most cases, this letter is issued at the conclusion stage. Management letter. Management letter. And if I may ask you, what are some of the issues that are identified in management letters? We have internal control weaknesses. One, internal control weaknesses. If there are any weaknesses in the internal control system, that can be the basis for a management letter. If there are any deficiencies in the entity's internal controls that could increase the risk of fraud or errors, then such can be the basis. Such can be the content of a management letter. Number two, we have accounting policy issues. If there are any issues that the auditor has come about, areas where the entity's accounting policies are not appropriate or are not consistent or consistently applied, where accounting policies are not consistently applied, the auditor may decide to write a management letter to the management highlighting such issues. 3, financial reporting issues. Financial reporting issues. If in the process of auditing a company, the auditor comes across financial issues like errors or omissions in the financial statements, then the auditor is required to do a management letter to that effect to the management. Another issue that may be included in a management letter are operational inefficiencies. Operational inefficiencies. Operational inefficiencies. Organizations are required to be efficient. The operations of an organization ought to be efficient. But where there are areas where the entity's operations could be improved, or where costs can be reduced, or where efficiency can be increased, then the auditor can cite or identify such areas through the management letter. We may also have compliance issues. Compliance issues where the company is not complying with the regulation standards or even its own accounting policies. non-compliance with the applicable laws and regulations, that again can be part of an engagement letter. So that is to mean, candidates, that is to say that a management letter is meant to be a constructive tool for management. In fact, the management should eagerly await for the management letter because it is a tool that can help them improve in their work. And the letter sometimes does not just highlight problems. The external auditor may make recommendations. That is one of his duties. A management letter should provide specific recommendations for addressing the identified issues. And the auditor should also be available to discuss with management issues identified in the management letter. You understand? So the management letter does not just contain a list of the problems identified, but also recommendations on how to address the problems. Now, if you have to ask what are questions in regard to management letter, what aspects or what are the components? Don't just cite internal control weaknesses. No, there are also other issues: accounting policy issues, financial reporting issues, operational inefficiencies, and also compliance issues. Now, you may also be asked a question: what are some of the factors to consider when preparing a management letter? How do you answer that question? Considerations when preparing a management letter as an auditor. What considerations? What are the considerations? Materiality, number one. Materiality. Materiality comes number one on the list of considerations when preparing a management letter. By materiality, we mean that only issues that are considered material to the entity's financial statements should be included in the management letter. Issues that are considered material. So if you have immaterial internal control weakness, you don't have to write it to management. All right, it should be material, and we all know what materiality is all about. Another consideration is clarity and conciseness. Clarity and conciseness. The letter has to be clear. The letter should be clear, should be concise and easy to understand. 3, specificity. Specificity. The management letter should provide specific recommendations for addressing the identified issues. Specific recommendations for addressing the identified issues. Specificity. Objectivity. Objectivity. The management letter should be objective and based on auditor's professional judgment. Materiality, clarity, specificity, objectivity are considerations when preparing a management letter. Do you have a question on that? That is the issues identified during the audit process. Internal control weaknesses, accounting policy issues, financial reporting issues, operational inefficiencies, compliance issues.